Again, I implore you to remember, f your puts, f your calls. Jay Powell has you by the balls. God bless my money printer.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. A special Wednesday update. A massive recessionary trigger just occurred. The job revision numbers from the BLS going back for 1 year. The government created less 818,000 jobs, less than they estimated originally. Why does this number matter? Remember, this channel is about market history. Because for 30 years, whenever you've had job revisions come in 500,000 or greater, you have had a recession every single time. You just had a job revision down of 818,000. This has not occurred in 16 years. And the last time it occurred, this time was 1.5 times greater than the last job revision down of 500,000 or more. So this is a massive recessionary trigger just ahead of Fed Chair Powell at Jackson Hole, Wyoming. So guys, add it up. Let's add it up. Violent Femme song, fantastic song. Add up all the recessionary indicators. We've covered them ad nauseum. Unemployment, recessionary trigger, has already triggered. Leading economic indicators, 3-month 10-year yield curve inversion, and now the job revision. They all lined up. You are going to get this recession, a 99.99% statistical probability based on the indicators. Nobody is going to tell you that information. And as I sit here and tell you this, guys, remember, this is the channel for months now, and I'm still sticking to this. You're going to get a blow off top. The market will not care. They will sell you this until you get that blow off top. Just understand this market is driven by sentiment, and that drives the cycle. And we are setting up for that blow off top, tracking beautifully to the GFC pattern, as you all know. And you may ask why? Why, Brendan? Why will we get a blow off top when all of these indicators with 100% accuracy, some of them going back to World War II, have never been wrong? How could we possibly still get a blow off top?
The people are retarded.
And that's absolutely true. This is the same setup every time, guys. If you don't know what I'm talking about, go back to the last video I did with Jeremy Irons reading to you from September 18th, 2007, when Wall Street cut rates, or the Fed cut rates for the first time. Go listen to that podcast, because the setup is always the same. The sentiment, the euphoria, the market cycle plays out the same way in all 12 recessions since 1953. This upcoming recession, the 13th recession. We'll get the blow off top. People will tell you it's going to go into the 2030s, just like Tom Lee's prediction. You have the Goldman CEO telling you no recession. It doesn't change anything. They never, ever predict the recession. In 2007, you had all-time high for Wall Street bonuses. And then what do you have in 2024? All-time high for Wall Street bonuses. Follow the money. I said this on Discord yesterday for my live stream, but I just want to give you guys a little thought experiment. People ask me all the time in YouTube comments on the Discord, what have I done personally? What have I done? What if I came on here on this podcast and said, guys, what I did was I sold out all of my largest positions. I'm sitting on an all-time record high of cash, and I bought a shitload of treasuries, right? If I told you I did that, half of you would be like, well, that's really smart. And the other half would be like, well, that's stupid. The market's going to keep going up. You know who I would be if I did that? Warren Buffett. That's exactly what Warren Buffett did. He's sitting on almost 300 billion with a B cash dollars. Okay. He owns 4% of the treasury market, 4%. Berkshire Hathaway, Warren Buffett owns 4% of the treasury market, more treasuries than the Fed owns. He sold out of all his largest positions. He sold half his Apple position the day before that 10.5% decline. You would be Warren Buffett. And Warren Buffett, of course, has that indicator named after him, the Warren Buffett indicator, and the market is at a peak over evaluation. Warren Buffett doesn't care about the blow off top the way I do. He doesn't care if the points go up 200-300 points. He cares about what happens after, because historical market precedent, every single recession plays out the same way. The market takes out the cycle low. That means the S&P drops below 3,500. My target, 2,000 to 2,500. Think about where we are now, 56, 5,700. Think about if we get to my target, let's call it 6,000. We have 5,900 to 6,100 S&P futures. You get to 6,000 to take out 3,500. You could easily come to 3,000, a 50% decline, the exact same bubble decline you did in .com. Remember, a bubble drawdown is at least 50% historically and oftentimes overshoots. You got 57% in the GFC. You got 62 or 64% in the Nifty 50. Oftentimes it overshoots, but do you see how it all lines up? And nobody will tell you on TV. They hide it from you because they profit from you, and they will profit when they flip the sell switch, and everybody, meaning retail, ends up selling their assets for massive losses because most people aren't going to sit there and hold as they watch their stocks get chopped in half, go down 60, 70, 80%, depending what they are. So understand that. But we have the most fun trading just ahead of us because I think we're going to have this chop with Powell talking on Friday, expecting him to be dovish. You're going to have that market moving up and down above the 50 and then below the all-time high, maybe even poke above the all-time high, but it's all going to be about the staging ground, setting us up for that September 18th rate cut where you will see those rockets, just like a SpaceX rocket, take off. That's what's going to happen, in my opinion. And then we're going to get that top, and it's going to be amazing. And we get to do video edits of all the morons on TV telling you to buy when you get the first pullback. I can't wait. I can't wait. I'm so excited. All right, guys, let's go ahead and cover some charts. And I hope everybody has a fantastic weekend. Check out our Discord. The information's in the video description. You want to join our room? Love to see you guys there. Message Lee and Telegram with any questions. All right, boys and girls, time for some charts. If you want to help support this channel and you want to trade these markets, check out Simple FX, where you can trade equities, commodities, cryptos, Forex, everything. The details in the video description, as well as BitUnix. BitUnix, where you can trade all the cryptos, no KYC, no VPN. Link in the video description. Message Lee if you have any issues or questions at all. All right, guys, let's start off on S&P futures, GFC cycle. By the way, let's take a moment. If you can help out the channel, hit the like button, hit the subscribe button. We've been growing again at a nice clip here recently, and I really do appreciate it, guys. So if you like this content, help me out, like, subscribe. If you leave me a comment, I always reply. If you didn't see the reply, go back and look at the video you commented on, because sometimes it takes me a day or two, depending how many comments we get. And some of my replies are multiple paragraphs long because I'm trying to help as many people as I can. If you are new to the channel, check out the last couple of videos. Go back to the Jeremy Grantham video on market bubbles. Get caught up because I can't spend 10 minutes on every chart, every single video, okay? Let's look at the ES futures. This is a GFC cycle. Where are we? Doing the exact same thing. Here is the Jackson Hole meeting back on August 30th, 2007. This is where we're going to be, guys, before September 18th. And a volatility range up and down, ultimately breaking out September 18th, new all-time high, right? That's the move we're looking for, despite that new recessionary indicator that's been accurate for 30 years, the job revisions triggering today. The market will not care, does not care. Look at the sell-off, tiny baby sell-off. Here's our big macro pattern on the ES futures, symmetrical waves, 15 and a quarter, 15 and a quarter, bringing you up to our target range of 5,900 to 6,100. What's that time period we're looking for a top? October top, guys. Just like in the GFC, that's the prediction I have. And between now and then, you're going to do this. You're going to chop. Most importantly, I think you want to hold the 50. You want to stay above 5,500 here. So if you do get more of a rally with Powell, if he is super dovish, you at this point, you're so close to your all-time high, 100 points away, you could make a new all-time high, get a pullback. You're going to get volatility. To me, none of that matters. September 18th will give you the SpaceX rocket to a new all-time high. Okay, that's what we're looking at. So these are tradable moves in these ranges as they develop. You will get a pullback at some point because this rally, super euphoric. Strongest rally since 2022. Had yesterday's candle closed positively, it would have been the strongest rally in 20 years. Okay. So at some point, whether Powell brings this up more, you will get a pullback. It's important to try to hold above 5,500, hold above that 50, or just get some wicks below and pop back up, because you want to stay in that staging ground for the September 18th rate cut to continue to move up to your October top. Okay. Again, just my prediction. Let's look at the S&P futures here on the daily chart. There's your 50. You're getting some wicks up here, having trouble at this fractal high over here, 56.21 or 56.29. You're at 56.21. Again, even with this new recessionary indicator triggering, market doesn't care. Jackson Hole officially starts tomorrow. Powell gives his speech Friday. We could get a nice little pop if he's dovish. Look, if Powell comes out really neutral, guys, I answer a couple of your questions here. If Powell comes out really neutral, you're going to get some chop. But if Powell comes out hawkish, somebody said, what if Powell comes out hawkish? I don't anticipate Powell coming out hawkish at all. Reason being, the bond market totally levered up, record all-time high on leverage. We'll go over that on the big video on Sunday, okay? Record all-time high leverage. The market's pricing in 80-90% chance of September 18th rate cut. I don't think Powell's going to come off hawkish, but if he does, you don't need me for that. I can tell you what's going to happen. You already know. Market's going to sell off. You had a massive rally. You would sell off with a hawkish Powell, but I don't think that's what you're going to get. And confluence with these massive job revision numbers that dropped today. Again, largest job revision in 16 years was the last time. And it was 1.5 times greater than that point 16 years ago. Okay. Massive job revision numbers. The government overestimated all the jobs, the birth death model, lots of problems with that. You guys knew all along these job numbers are fake. Why? Because you have family and friends that can't find work, or that are unemployed, or that just recently got laid off. Everybody knows except the media, the last people, because they have a money motivation to keep you in the market. So when you're looking at what the S&P can do from a range, I always digress. I apologize, guys. From range perspective, again, with your all-time high so close to 57.21, if Powell's super dovish, and by super dovish, I mean, if he forecasts we could be cutting rates and specifically says 25 to 50 basis points, I think you're going to get a pop in the market, right? So you could take out the all-time high. Just understand you will pull back at some point, but the ignition point is September 18th. No matter what happens in between now and September 18th, the ignition point is September 18th. Why? Because in the GFC and .com, we rallied for 23 days post rate cut after both of them. And .com, you were almost in a bear market. You got the first rate cut, you still got the rally. Now, another key confluence thing, the first rate cut in the GFC was 50 basis points. The first rate cut in .com, also 50 basis points. I think with these massive job revision numbers, you're getting a 50 basis point cut again, right? I would wager on that. What does that mean? It just means it's further confluence and symmetry and synchronicity with the previous bubble cycles, which to me as a pattern trader is absolutely amazing. So again, just watch these levels, try to hold the 50, try to stay above 5,500, may poke up here for a new all-time high or challenge it. You're going to get chop. You're going to get volatility over the next month until we get that rate cut, and then you will get ignition. Looking at NQ, it's playing out the exact same way. GFC guys, what is the NQ doing now in the modern market? You're breaking up above the 50. Ultimately, you want to stay above the 50. You see you got wicks down here and everything else, but it's all about the ignition point, September 18th. 14% rally is what you got. 24% off the low, right? 24% off the low, 14% up. And then what happened? Massive, massive decline after your November 1st top, right? Massive, massive decline. That continued. Look at the drop. All the way, this is coming soon to a theater near you, all the way to March 2009, the spring equinox, okay? You're going to see this repeat once again. Just speeding through this because this is a market update video. I'm not trying to over-talk it, but let's look at this. So modern market here for NQ. This is a NASDAQ futures. I want to try to hold the 50, but it's just below you here. You're right at, where's the 50? About 19,650. You're at 19,800. So again, you could get some chop. You could get some candles below here, especially if you get a pullback or Powell disappoints and isn't super dovish, but he's more neutral. But again, none of this matters, guys. These are trading ranges for sure, okay? But I'm looking at the swings. The swing for me, the rate cut September 18th, where we're doing this, and then obviously the top, okay? Obviously the top, potential life-changing trade, okay? So that's what matters the most to me. But if you get some obvious patterns that print here on smaller time frames, we got a lot of people in the Discord trading these moves, you definitely get moves because you got volatility spiking up and down. Ultimately, just watch this. Again, the meeting is coming up Thursday and Friday. Powell Speaks Friday. See if you get a pop up. If you get a pop up, watch 20,206, which is your 786 from your all-time high, okay? If you start drifting back down, you want to try to stay above the 50. You can come lower. Remember, the NASDAQ can pump and dump much more rapidly than the S&P. You can come lower, but ultimately you want to be above the 50 before September 18th for that nice rally up, okay? Let's go ahead and look at Bitcoin. Our big three peaks top pattern, 1, 2, 3 peaks, and of course the domed house, which is a head and shoulders pattern. That's how I think this will end up playing out. And again, we can discuss those levels as we get another pattern that forms. But ultimately, the first thing Bitcoin needs to do, just like the NASDAQ, see how it's tracking below the 50. We want to get above the 50. And again, that staging point, right? That staging point is going to be, for me, right around that 68, 69K, putting you some type of box like this. Why? Because you have a three peaks pattern here as well. The fourth peak is oftentimes the peak you break out of. Here's your three peaks. Get back up into the staging area in line with September 18th. Take off with the other markets. Bitcoin may lead, Bitcoin may lag, but ultimately the money flow in the marketplace, it will pull up risk assets. And as you guys all know, Bitcoin can go parabolic. The level you want to hold, if we get more volatility, more drift, in my opinion, right down here, look at my screen, 54K. Why? You got a lot of demand below 54K, no doubt. But again, this is just a level here that you want to try to hold. You got a nice W pattern that formed here on Bitcoin, and you want to see it break out, okay? Let me go ahead and draw this for you. You want to see it break out, take out that midpoint fractal at 3, and come up to this level, come up to 68.5, 69, somewhere in this range up here. Come up and start going sideways to build you an accumulation base, your launching pad to the upside, okay? And this may take some time. We got to see what the markets do because the markets had that parabolic rally. They may need to pull back some and cool off after Powell talks. So maybe next week, get a nice little pullback, try to hold the 50s over there, bounce up and down. Bitcoin's just going sideways, bouncing up and down, retesting the 50, retesting 58.5, up and down, up and down. Eventually, everything will push up. If we look at Solana, same thing, guys. You're below that. You got above the 50, back below the 50. You have a nice W pattern. You want to try to hold on Solana 130. You're at 140 right now. You certainly have a lot of demand all the way down to $100, but you want to try to hold that 130 level if you come down some more. And I want to see the breakout above 161 to come up to 175 because just like Bitcoin, just like the DAX, just like so many assets, you have a three peaks pattern that formed. Again, the fourth peak, once you start building your accumulation range, that fourth time, the fourth attempt is when you break out, okay? And I believe that will happen in confluence with September 18th. Guys, hope you enjoyed the video. I answer your comments as always, and have a fantastic weekend. Next video update will be Sunday. Take care, everybody.